And there's this raging debate about should we panic with inflation at this level right now. Clarida, the former vice chairman, Richard Clarida, Michael Feroli, has suggested we're going to bring up the 2% level. What do you and Bruce Kasman and your team say? What is an appropriate blended, banded target rate for the new Fed, the next Fed?
So if we're talking about real GDP growth, and we're talking about potential real GDP growth, normally we think of that as something that's going to, obtain over on average the next 5 years or something like that, right? I think in this particular situation, it's hard to get around the issue of immigration and how that's affecting trend growth. So just to, level set here, over the past 12 months, we've averaged payrolls around 250,000 per month, job growth 250,000 per month. And in that period, the unemployment rate has trended up on sort of averaging out about 0.3 percentage point, which would tell you, all else equal, that steady state job growth could be above 200,000, right? And if that's the case, then I do think potential GDP, if you want to put it that way, over the past year has probably been above 2%. Yeah. Certainly we've had growth well above 2% over the past year. Again, alongside no evidence of tightening in labor markets, no evidence of that tightening in inflation data or wage data. So I do think currently, the full employment growth of the economy is above 2%. Now, I started off by saying normally we think about, potential GDP growth as something that's contained over long stretches of time. And I think in this situation, it's a little more tricky to say because, the prospects for immigration into next year, I think, are going to depend on, policy choices that are made regarding immigration policy, which could, dramatically affect whether that 250K number I mentioned earlier is going to be something that, rolls on into 25 and beyond, right?
Michael, how concerned are you about inflation? Because I think there is a debate out there in the marketplace whether what we've seen over the last 3 months is something we need to worry about or not. How do you think about it?
I still think we're on a disinflationary path. For one reason, I guess if we can either come at it from a bottom up or top down. I think from the bottom up, Chair Powell a few times yesterday laid out the case for why rental inflation is going to come off. And if rental inflation normalizes, then I think that gets you, a good chunk of the way back to a more, acceptable inflation rate. And I think you could see that in things like, in Europe, they use this HICP, which is basically CPI minus OER. The BLS here in the US produces one of those. And right now that HICP is a little over 2%. Core HICP is a little below 2%. So, basically from the bottom up, if that, if those rental measures come down, that gets you a long way there. And from the top down, I don't really see in a big way inflation pressures picking up in the first quarter.